How did a scrappy kid from Hawaii go from dropping out of university while studying mathematics to co-founding Ethereum and later founding Cardano, two of the largest cryptocurrencies in the world? Today, we're diving deep into the history of Charles Hoskinson and Cardano in our series, Foundations. Charles always loved teaching and monetary policy. He was frustrated with the current system and, in fact, even worked on the Ron Paul campaign in 2008. He knew a change was needed. So when Bitcoin came out a year later, Hoskinson immediately knew it was going to reshape the world.
Crypto.
As cryptocurrency becomes more popular, we're starting to see signs that it could become part of our financial future.
He was attending the University of Colorado Boulder and decided to start buying and mining Bitcoin. And by 2013, Hoskinson knew Bitcoin was here to stay. He combined his Bitcoin enthusiasm with his love for education, starting the Bitcoin Education Project that same year, where he onboarded tens of thousands of students into the life of crypto. And then he did time at several other crypto-focused companies like BitShares, where he realized just how hard it is to alter blockchain code after the coin had already been launched. And just like that, the seeds for starting a new blockchain had been planted. Meanwhile, he continued his work educating the masses on Bitcoin, now with the Bitcoin Alliance of Canada. And that's how he ended up meeting the future founder of Ethereum, Vitalik Buterin. Hoskinson and Vitalik both attended the first ever 2014 North American Bitcoin Conference. This conference in Miami changed crypto forever. Ethereum was born. But cracks started to form between Vitalik and some of the co-founders. When Ethereum started out, it had a business side and a development side. According to Hoskinson, he was a CEO in name only, without much power. He was a glorified middleman between the two. Hoskinson wanted Ethereum to do a for-profit model so they could accept venture capital funding and then set up a separate non-profit foundation to run a crowd sale. He felt the Ethereum project had grown too big for the current management structure. There were lots of transitory workers that were working on a volunteer basis with the hopes of being paid in Ethereum down the line. But that meant good developers would sometimes move on to accept paying gigs. He also had a problem with the lack of hierarchy. There was a committee of 8 people trying to make decisions, but every meeting was painful as nothing was decided because no one had the final say. Charles wanted to centralize the company so they could actually build something. But Vitalik disagreed, saying a for-profit company would ruin the original vision. And that's when a lot of people exited Ethereum, including Hoskinson. Some say Hoskinson left and others say he was removed. But his mysterious Cardano co-founder, Jeremy Wood, who was an executive assistant at Ethereum at the time, left with him to form Cardano. He founded the Kansai Bitcoin meetup group before he made his way to the Ethereum Foundation. Then he left to found Cardano with Hoskinson, and we still don't have a lot of information about what he did at the company. Wood retired from Chief Strategy Officer in 2020, and he hasn't been heard from since. Now, since the great Ethereum split, Hoskinson and Vitalik has sent various shots to each other. When pressed, Hoskinson has said he wouldn't work with Vitalik again because they have different values. He's made fun of Vitalik's quest to live forever and never grow old. And Vitalik has scoffed at Hoskinson's obsession with academic papers and research rigor, saying Hoskinson cares more about professor types versus customers. He's even implied that Hoskinson was incredibly immature and toxic when they worked together years ago. Ouch. After the Ethereum split, Hoskinson and Wood founded Input Output Hong Kong, also known as IOHK, and the development of the Cardano protocol began, which is named after the Italian mathematician and scientist Girolamo Cardano. In fact, most of the things in the Cardano universe are nerdy homages to great thinkers and artists. Ada is named after Ada Lovelace, another mathematician and writer. The Cardano team is broken up into 3 parts. IOHK develops the Cardano protocol and technology, and Hoskinson and Wood both own 50% of the company. This is also the company writing all those academic papers that get submitted for peer reviews. Then there's the non-profit Cardano Foundation, which holds the trademark, manages projects, and oversees standards and community development. They're based in Switzerland, and Frederick Gregard is currently the CEO. And finally, a Japanese company called Emergo was a big initial investor for Cardano. It's currently ran by Ken Kodama. They retained the company that handled the ADA crowd sale between 2015 and 2017, which was originally only available to Asian customers and raised $62 million in Bitcoin. This model of multiple companies, both for-profit and non-profit, has become the model for many crypto companies since then. Hoskinson created Cardano with three main goals: security, scalability, and interoperability. It was created to address the issues of Bitcoin and Ethereum. Cardano was also one of the first blockchains to introduce the proof of stake method, a move which Ethereum ended up following in September of 2022. But what about their tokenomics? A big difference between Ethereum and Cardano is Cardano has a 45 billion supply cap. Ethereum doesn't have a supply cap. Vitalik designed it this way to allow for greater flexibility and scalability. However, holders shouldn't worry too much that Vitalik will suddenly inflate the currency because ETH issuance is capped at 18 million per year. Still, a capped supply is what makes crypto different from fiat and should, in theory, create increased value. But let's dive a little bit deeper into ADA's tokenomics. It originally had a market cap of 600 million, which had prices trading around 2 pennies. At the height of the last bull run, it reached $3 with a market cap of almost 100 billion bucks. But how did it reach these heights? One reason is the treasury system. It spends funds for the long-term health of Cardano. A portion of all transaction fees feed the treasury, and it's used to support future development that's approved through governance. And in case you aren't familiar with the term governance, that means ADA holders get to vote on which dev they want the treasury to fund. Or you could point to the sustainability. And sustainability here doesn't mean eco-friendliness. It means careful, methodical growth versus speed. This had led some Cardano skeptics to criticize how slowly they roll out new tech. However, Cardano has also maintained perfect uptime since the network launched. It's very different from competitors like Solana or even Bitcoin. If you want to see our Solana Foundations video, link will be below. This slow and methodical approach has led to a ton of partnerships with universities for blockchain research, including the University of Edinburgh and the University of Wyoming. Cardano is also being used by the government of Ethiopia for student ID verification. In fact, Cardano has a lot of partnerships on the African continent. There's also a partnership with World Mobile that gives internet access and digital identities to rural communities in Tanzania. Then there's the partnership with Save the Children in Rwanda that began accepting crypto donations and rewarding local farmers that participate in their initiatives like planting trees and improving soil quality. Hoskinson has a goal of onboarding 100 million African users by the end of 2024. Now let's look at development. Cardano has already seen where it's going into the future. These are referred to as eras. The first era was referred to as Byron, named for Lord Byron, the poet, politician, and infamous womanizer. Byron started in 2017 when Cardano mainnet launched and ADA was available for public trading. During this stage, they launched the dataless wallet. The Byron phase lasted until 2020 when the Shelley phase took over. Titled in honor of author Mary Shelley, this phase brought staking and delegation mechanisms, created staking pools, and improved security and performance. During this phase, Cardano also rolled out the Mary hard fork in March 2021. This allowed users to mint tokens on the network, creating altcoins on the ecosystem. Then in September 2021, Cardano achieved the Goguen era, titled in honor of computer scientist Joseph Goguen. The main goal of Goguen was to expand Cardano's smart contracts. During this era, Plutus was introduced, which Cardano describes as a smart contract development platform. Plutus utilizes Haskell, which is a programming language for smart contracts. Plutus is also the name of the Greek god of wealth, prosperity, and abundance, while Haskell references logician Haskell Curry. I swear, studying Cardano is a history and culture lesson. And finally, we arrive at our current Cardano era, which focuses on scaling. Basho. Basho introduced sidechains to improve performance. Sidechains are new blockchains that can take on work when the main chain is overran with transactions. Cardano hopes that Basho will lead the blockchain to become the most high-performance, resilient, and flexible blockchain platform in the industry. I guess time will tell. And once Basho is complete, we'll enter the Voltaire era, named for the French Enlightenment writer and philosopher. This era will focus on governance with the goal of Cardano becoming a completely self-sustaining system. They'll introduce voting for the treasury that I mentioned previously, so hodlers will be able to decide what projects receive funding. This is when Cardano will reach true decentralization. IOHK will no longer be in charge. That'll be left entirely to you and the rest of the community. Now we just need the ADA price to catch up with Cardano's innovation. Or maybe it's good, because it gives us more time to add to our bags before Hoskinson enters his glow-up era. What do you think? Do you think ADA is a steal at these prices? I personally think ADA can hit at least $5 this cycle. Am I not bullish enough? Leave me a comment below and I'll see you at the top.